Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And hold your judgment just real quick. All right. The purpose of this video is to find companies that have, let's say, relative weakness in the market as the market for some reason continuously goes up. And we're trying to find, if there is a correction, companies that may do absolutely terribly. Okay. And we're going to look at Peloton in this video to see if it's actually worth our time. Let's get started. Two Super Guys Trade Stocks.
Dylan, you know what I was thinking about that entire time? That scene from Tommy Boy where that kind of evil, slimy stock car part salesman says, what's American capitalism if you can't tie a company to a tree every now and then and bash it with a shovel?
Yeah. That's actually one of my favorite movies. Yeah. So, look, I'm trying to get a catalog of companies that I think are horribly overvalued, even though they have fallen an absolute crazy amount, right? Like an easy no-brainer short, like Nikola, in my humble opinion. I'm sorry, but they have 4 months of money left. So in case there's a big correction, you have these companies that are showing relative weakness as the NASDAQ or the SPY goes up, and usually those companies that aren't going up a lot in a very bullish market tend to tank the hardest in a bearish correction. So trying to have a list of these companies. What I did was I saw this highest paid CEOs in the US, and I was utterly shocked at two of these names. Okay. Obviously Peloton, right? Mm-hmm. Why that dude's making 168 million seems outrageous, right? Full disclosure, that's like 25% of their cash on hand, but okay. And then this Hertz guy, I don't know. Do you know him?
No, I mean, the commercials are really annoying. That's all I can really tell you about that. The only kind of real major lesson I take from this list here is that Tim Cook is way underpaid.
Yeah, I know, right? Like, imagine you're being outpaid almost double, not quite, but by Peloton. So we're going to take a look here, and this is not on Hertz, but I'm not going to lie, that graph's pretty interesting. I might have to look into Hertz too. So cash on hand, they have 874 million. Okay. You can see that this is quarterly. They had a fantastic 2021 period and then made a couple very poor decisions and lost a lot of cash on hand, but they're staying steady. So that would be kind of a point to them. Now their liabilities, on the other hand, are not really going down too much. The benefit they have is they borrowed money at a very cheap time to borrow money.
Nice.
Like that is definitely a point for them. But let's get into the actual details, right? Anyone can throw up those graphs. So I looked at the last all the way to 2020 quarter one reports, and I made this graph off of how they're actually getting their revenue. Okay, so the red is going to be subscriptions. All right, they're chilling about 420 million. The blue is connected fitness products. Okay, this is the one that's killing them. This is not doing well.
Yeah, they're not selling new devices anymore.
No, yeah, and they stopped because they had initially bought a warehouse, and then they decided not to we need to pivot, which was a good call. But the problem is, I think their cost for everything is just significantly too high. So we're going to look at three numbers here, okay? Total revenue, total cost of revenue, and total operating expenses. Okay? Now let's look at that graph over all quarters since quarter one 2020. So blue is your total revenue. You want this very, very high. You never want this to intersect anything. Okay? Your red is your cost of revenue, and your yellow is your operations cost.
Okay.
So ideally, can you see my mouse?
I can.
All right. You want a distance, a solid distance between these two at all times. This narrowing is scary. This intersection is worst possible situation. You never want that to happen. and then
No.
you want to hold up. I would say they are holding up fairly decently after correcting this nonsensical mess. Would you agree?
Mm-hmm. Yeah. I mean, I know they ousted the CEO, and the gentleman that I think was referenced there is a new CEO.
Yes, it is. So I would give them a point for that. All right. It looks like they are making smart decisions. Now, I don't put a lot of weight on this shit because I swear these people are wrong all the time. Like, I think there's still some on Micron that are being like, yeah, it should be $120. And it's like 60. They just got downgraded. They're staying relatively. Do you mind pulling their graph up on your end, by the way? Their chart?
Sure.
So they're staying relatively around $9. It's not letting them hit them too hard. They surprisingly are 86% institution owned. I was actually kind of surprised by that number. I figured it would be significantly lower, but their market cap right here is $4 billion. That is outrageous to me. That makes zero sense. I don't know how you feel about that.
I mean, I think this company is ridiculous. They're selling a premium product at a price that, yeah, sure, people in that end of the economic spectrum are more insulated from kind of economic downturns, but you're still going to have kind of booms and bust period. We obviously saw a fantastic boom for them, and now we've transitioned to this time period where not doing so great. And unfortunately, you have a company that has significant marketing costs. Their product costs are too high. I would want nothing to do with this business. It is like hot garbage in my personal opinion. But well, I'm just an idiot, so I don't know.
So one thing, I'm going to actually piggyback off that in 2 slides. Here's one thing that I also wanted to put attention to, right? So this is 2023 March. This is their latest one, and June 2022. So this is 9 months apart. They lost 25% of their assets within that period, right? And if you look very, very closely, they're completely trying to get rid of property and equipment. Wait, hold on.
I get a little bit there. It looks like it was inventory that was really the drawdown there.
Yeah, where is it? I can't see it. There we go. Boom. Oh
Yeah,
my God, my
1.1
mouse is
billion
on.
out of 625 million.
So they're draining their inventory, but I don't know what's going to happen when this number gets smaller, because if they wanted to produce more inventory, that's going to honestly increase their cost a large amount, and they're already barely skating by, right? You can't just increase inventory without putting in a significant amount of cost. So this whole business is, in my opinion, living off of their subscription model.
Oh, absolutely. That was always their goal, but they would have to scale that to a significant size to be able to cover their kind of general overhead expenses, which I don't know if I see a path to that.
So if you look at what they offer, right? They have the bike, which they're no longer doing in-house. They have the classes. There's like 50 instructors, and then they have an app. I think it's $12.99 or $13. And there's no equipment classes. There's all that stuff. But eventually, people are going to realize that all that is free on YouTube. Like at some point, there is so many trainers that just put all that stuff for free on YouTube, and you can just do it over and over and over, and then switch to other free YouTube channel, right? I don't understand how they are. Do you have their graph?
Yeah,
It's just wild to me.
Down 63% in 5 years.
So I think they hit a peak of 170, right? As you can see from that.
Yeah. 160.
The scary thing is, hey, how do you short when it's already down from 9? You've missed the big chunk, but that's not accurate. I shorted Nikola from like 12 to 4, 9 to 2, and 7 to 2, or whatever it was. So, you get to a point where you can't short anymore, but I still think they are possible, but I would only short them if I start to see their subscription model downturn. I want to see them actually lose money from the previous quarter. That has not happened yet, or I think they they were like stationary ones. They lost like a very tiny amount. I want to see a decent dip as the market is dipping, and I want them at like $12. I think that's the only way that I would short them.
Okay, fair enough. I mean, I don't know as far as prediction for them. They're up 20% in the last month, in case you were curious.
I know. I saw. I was thinking about it. The
Yeah.
20% was pretty wild. I might buy a put. I really want to see their subscription model lose revenue before I do this.
Okay.
Yeah.
Yeah.
So
I mean, that's
wait
something
for
I guess you
earnings.
can see how sticky the model is, but
Yeah. Because I mean, Planet Fitness makes money off of people not going to the gym, right? Yeah. Do you have a Planet Fitness membership?
No, but I did that at one point in time where I
Yeah.
had it for like 2 years and went twice.
Yeah, they just hope that no one goes, right? So I mean, look, sometimes people feel guilty deleting the $13 app. Maybe that's a it's a perfectly fine business model, but I will short if it hits those parameters for me, right?
Okay. Fair
All right,
enough.
guys. We might look into Hertz because Hertz is interesting. All right, later.